Welcome to Decentralized News, our weekly coverage of the major headlines in Bitcoin and the cryptocurrency space. I'm your host, Piter, joined as always by Ozzy. We have great stories as always this week, so let's jump right in. Please do your own research. This is not financial advice. We're sitting in a low volatility, low volume environment. It can seem like it's boring, but there is always exciting news going on. PayPal had a press release on August 7th, today, announcing a launch of a stablecoin. So the announcement marks the first time that a major US financial company has created a stablecoin. They confirmed the existence of the project in early 2022, and they began integrating crypto services in 2021. And I can vouch for that because my mom has just a teeny tiny bit of Bitcoin and ETH on PayPal, allowing users to buy, sell, and hold major digital assets like Bitcoin and Ether. P PYUSD will be pegged to the US dollars, issued by Paxos, which was the same as BUSD. So that's a little bit of a negative. But PayPal USD holders will be able to transfer their stablecoins between compatible, quote unquote, compatible external wallets and PayPal. And they'll also be able to fund purchases with PayPal USD. So that's exciting. The stablecoin will be available starting Monday. That is today. And PayPal customers will be able to purchase, send, convert funds purchased in the coming weeks. So you can start to get it. Looks like can't quite use it yet. And this comes on the heels a few months after PayPal enabled crypto purchases for Venmo users. So exciting news.
PayPal's making a huge move. It's also our second new US dollar stablecoin in the last couple weeks, with Hong Kong First Digital Group announcing their own US stablecoin last week. So
That's right.
we're kind of seeing some big moves, and this is pretty bold because this is like the first time a major player in the US that wasn't like new from crypto has launched their own stablecoin. And so that's a pretty bold stance considering what's going on with the SEC and the fact that they are trying to pass the Stablecoin Act within the US right now.
Yeah, this is like an internet company trying to evolve into a little bit of a blockchain company, kind of keep up with the times.
Yeah, it's kind of the conversations that we're seeing with Visa and MasterCard, who are both trying to get into the Web3 space, because this kind of Web3 ability to conduct transactions will eat into their business if they don't adapt. And so this is quite
Like the
interesting.
and it that should not be discounted because when you think of companies that try to evolve into just the web, for example, a Sears, there's a lot of companies that were not successful in transitioning from traditional retail businesses, brick and mortar stores into internet businesses. There's not a lot of former brick and mortar stores that are big names in kind of the modern internet. Like one exception would be Starbucks. And they're even doing a good job continuing to evolve. That's like one of the things that they have done well is evolve, but it's not an easy thing to do.
No, absolutely not. It's quite difficult. And so it is very interesting to see this move. I just wonder, with their choice of partner, whether they're going to get themselves into some trouble, the US government, in the coming weeks or months, or maybe might take a year. Who knows?
Yeah, the only immediate pushback I would give to that is Binance just and CZ seem to be really in the hot seat, especially after the FTX collapse. So maybe that had something to do with it, but I don't know. That's just kind of a chair reaction to what you just said.
Yeah, absolutely. Talking about the kind of competition in the stablecoin space, uh, Tether is kind of that the PayPal stablecoin launch doesn't really impact their business, is because they're saying it'll just add more competition towards their other competition. Tether has a very strong foothold, and so it shouldn't really impact their users. And because it'll be mainly used on PayPal and for PayPal related business, it likely won't affect Tether's main.
Yeah, so Tether is kind of focused on emerging markets, developing countries. They're not based in the US. Yeah, they're saying it's going to compete more with USDC and then on the crypto side, then like MasterCard and Visa on the more traditional side.
Exactly. So it's kind of interesting to see this, like, argument and what's going to happen with Tether. I know there's been some concerns, especially because they reported slightly lower profits, but still profits this last quarter. Uh,
Before we do have some stories in Tether, before we jump into that, the one other interesting thing about the PayPal is we did have legislation going through about stablecoins. So maybe that'll add a little impetus for legislators to do something. The companies are moving forward with this kind of stuff. So maybe they'll add a little fuel to the fire for legislators to get something done.
Very possible. I think that's a strong case, and we'll see how the legislature moves in the coming weeks and months. I don't think they're able to move as quickly as some of these companies can. But Tether has also reported 3.3 billion in excess reserves, with a much increased Bitcoin holdings. They're now the 11th largest holder of Bitcoin in the world, and their reserves are up about 170 million, alongside a drawdown in some of their precious metals allocation, which is pretty interesting.
Yeah, they're less precious metals, more Bitcoin. Yeah, they're kind of it's crypto company. It's Tether, so I guess it's that much surprising. But yeah, they are. That was one part of one of the criticisms against it is that it's a volatile asset, and maybe if things go wrong with some of these volatile assets, they should be doing more like dollar back things as opposed to Bitcoin. But Tether didn't officially disclose the Bitcoin address, but Tom Wan is a researcher at 21.co said he discovered an address that potentially belongs to Tether that currently holds 55,000 Bitcoins, around 1.6 million. Didn't
Billion.
comment billion, sorry. Didn't comment, but the value matches up to the total Bitcoin mentioned in Tether's quarter reserve report that we talked about last week, the attestation report. But he first revealed his Bitcoin holdings in the first quarter of this year. So they do these reports every quarter. So in the last one, when it said it, and then it said it was going to invest 15% of its profits into Bitcoin, to 55,000, according to this. So putting some heat on MicroStrategies, I think they're at like around 150,000. That's not, don't quote me on that. But after MicroStrategies a little bit as far as becoming large holders of Bitcoin. So is this a good or a bad thing? This guy, Tom Wan, what he says, Bitcoin holding is part of the shareholder capital cushion. So this is the liquidity cushion on top of the current market cap of Tether's tokens. Bitcoin accounts for 50% of this cushion. So that's a pretty big percentage. What does it say? Less volatile asset like cash. Go wrong with gold or the precious metals that they hold or Bitcoin. Having something like cash would be a more favorable position for them, is what he's saying. There's another researcher from Crypto Quant, Michael. He said in the broader context, it isn't necessarily a major concern. Tether possesses a large amount of U.S. treasuries, but contribute to compounding risk as it introduces that added volatility that he mentioned as well.
Yeah, which I mean, there's going to be added volatility because it's Bitcoin.
Not lately.
But mainly, that's really not the case. I mean, Bitcoin's moved today, but it's not really as volatile as they've been talking about. And considering it's their cushion on top of existing holdings, I don't really see why, as a company, they take a bit of additional risk if most of their other holdings are in cash or in U.S. treasuries.
Yeah, if they can good profit and if they feel comfortable that they can sit on it and wait for it to come to profit, it seems like a good asset to hold. To watch the modern game theory play out, we're starting to see institutions take larger holdings, like my strategy and now Tether. They're going to drag some other people into it. I hope so.
Yeah, I could totally see that. I'm
Start
waiting.
putting Bitcoin on the balance sheet. That's what is it? The hyper Bitcoinization argument.
Yeah. If you enjoy the subscribe and share with your friends. It really helps the algorithm. Uh, we really appreciate your support.
Yeah, thanks for listening to Decentralized News. Some interesting news, not on the Bitcoin realm, but more on Ethereum, optimism, and the DeFi. But Base, which is also deals with Coinbase, though, so they're going to launch. They're set to launch on October 9th. So they kind of had.
August 9th. August
Sorry,
9th.
thank you. Yes. August 9th as the official release date. So coming up today, we're recording August 7th. So a couple days away. Third, Coinbase's network release a user interface for its official bridge. So as of August 3rd, you can now bridge, allowing end users to onboard for the first time without relying on developer tools. Its mainnet launched back on July 13th, but at the time, the only way to use the network, and people have been, was deploy command line developer tools to bridge ETH from Ethereum's layer one. But you start using the network immediately without waiting for the official launch. However, a lot of the Web3 apps may not be available until August 9th. With this announcement, they announced this month-long on-chain summer. So every day there's going to be kind of announced. So, freeze, that kind of stuff, airdrops. Those will be bringing something fun to do on-chain, highlighting art, music, gaming, advocacy, and more. Handing out NFTs to ETH users who bridge. I have done this yet, but I've seen some tweets about it. So if you bridge over, you can get a free NFT. Or so for bridging and for completing quests, giving out grants. ETH about $184,000 worth of grant. Some harsh news. Obviously, this week there was the bald
Meme token pump and dump.
on the OX, which I didn't hear about as much, but I did hear about the bald one. But this was like the people were able to bridge money before, this spins. But apparently there was a big pump and dump that happened.
Yeah, I mean, almost 400x in a matter of a week. And then the creator, the founder, pulled basically 99% of the liquidity, which was somewhere around 7,000 ETH and 149,000 bald tokens. And
Wasn't there some rumors that it was Sam Reed that got squashed?
I hadn't heard that.
Yeah, I heard there was some stuff floating around Twitter that it was Sam Bankman-Fried doing this, but they found a different developer who they think it is inside him. But anyway,
Yeah, so they had that, and then PondX, another meme token that also because a bug in the transfer function, so
mm,
able to rug the money. So
figured out because they got some big names coming over. I mean, it's like a crummy start because it was pretty exciting. They had names like Coca-Cola, Atari, Showtime, that about to offer daily mints on the on-chain collectibles. The daily mints are part of the company is calling the on-chain summer that we talked about a little earlier, according to Coinbase, Vice President of Product Max Brandsburg. So this is This is an interesting little note that I picked up on. The first publicly traded company to launch a layer two network on top of Ethereum. I didn't know that, and it's going to be based on a role-based, roll-up agnostic superchain powered by Optimism. And they've been adamant they're not going to launch a token for it. So I thought those are some interesting notes about it as well.
it'll be interesting. I'm wondering what they're gonna do, especially considering they're from the SEC, which Coinbase has moved to dismiss,
Mm.
basically alleging that crypto is not within the regulator's oversight. So is asked to judge to dismiss the SEC's case against it. So super interesting because it almost feels like them launching Base is almost taunting the
Yeah.
SEC
Yeah.
as they're basically asking for their case to be thrown out, saying that the violated federal securities law, and that they went above and further than they're allowed to within the law, which is very interesting.
Yeah. So they alleged that SEC violated federal securities laws by operating an unregistered broker, exchange, and clearing agency for cryptocurrency. And they named 13 tokens as examples. But Coinbase came back saying in this dismissal that the SEC isn't claiming that there are investment contracts involved in any of these examples. And they pointed to last month's ruling in the SEC's case against Ripple, saying the underlying facts are substantially identical to those alleged here. So we'll see what happens with it. The SEC has till October 3rd to file a response. Other dates involved there too, but probably before we get some updates on this one.
Yeah, this
But
is
the fact that they mentioned Ripple, oh, go ahead. Sorry, I
Yeah,
didn't mean
I was gonna say that the fact that they mentioned Ripple is super interesting because it is gonna keep getting cited in others, and we've already seen that with the Terraform Labs case.
right. I thought this was a fascinating story. Go ahead.
So Terraform Labs is attempting to have their case dismissed based on the Ripple case, but it was rejected because Judge
Right.
Akaw, who is in the same district court as Torres, who ruled on the Ripple case, and said that it doesn't draw the same distinction between coins that were based on the manner of their sale. So, is the difference between institutional and retails on exchanges. And so, basically, rejecting Terraform Labs is to have their case dismissed.
Right. They're seeing it and they're citing this Ripple decision as part of why they're rejecting it. There's like, we don't agree with this. And, this XRP case is going to set precedent, and as a law of the land kind of loses some steam. This is a judge in the same district at the same level, and they're not even in agreement. So how can this be precedent for the law of the land? It's just hard to buy that now a little bit.
Yeah, exactly. It's going to be, it's quite interesting. I think until it's gone through all the possible appeal processes, I think we're not a big difference.
Well, part of the reason he is going after all these people, at least they claim, is all the hucksters. That's what Gary Gensler's
Are
says.
you a
Watch out for the
huckster?
hucksters. No, but I'm susceptible to a huckster, that's for sure. Curve funds, they are susceptible. That is a big name in DeFi. They've been around a long time. Big on them, and they had a big hack. So come back a little bit, but still worrisome, and definitely into Gary Gensler's huckster narrative. But a hack that saw the lending program lose over 73 million worth of tokens caused a contagion effect across the broader ecosystem. And that's kind of um, this re-entrancy attack that allowed attackers to steal tokens from Curve and other platforms, lending platforms, Metronome and Alchemix, and there's some others too. Re-entry one bug that allows hackers to trick a smart contract by making repeated calls or software commands to a protocol in order to steal assets. The attack was traced to a hold on Viper, a programming language used to power parts of the Curve system. Now, Curve couped 75% of the stolen funds. It's been kind of an ongoing story this week. They offered a temp bounty past last night, where like if the hacker just brought the money back, they weren't going to do anything. But now they've offered the bounty to the public. Um, I'll go do, or actually we'll go into the details. So over the past week, this of the money that's 22 million in Ether and other derivatives stolen from the lending protocol Alchemix returned, a trading bot returned 90% in Ether stolen from the lending platform JPEG. Hacker CoffeeBabe.eth returned over 6 million taken from decentralized finance platform Metronome, and another ethical hacker returned 13 million from Alchemy. So there's a million out there. There's a bounty going. So there's that. That's about is one of the more interesting stories about this.
Absolutely. I think this is potentially a bigger takeaway. Uh, other about this is not only is Curve considered probably one of the big in DeFi in terms of available yield and supposed decentralization, uh,
Right.
Curve plummeted obviously in light of the hack. They went from 72 cents to about a low of 50 cents over the last week. But if the token were to have dropped as low as 35 cents, the founder, who was highly leveraged, would have had roughly 110 million worth of loans to being liquidated at that point in time. He had loans across a bunch of DeFi lenders, including Aave and FraxLend, and this would have become bad debt for the founder, and it would have these lenders with bad debt because they couldn't. It's the kind of debt that can't be recovered. Um,
And they're for the users of the platform, right?
yeah, and therefore it would those users who may have lent those funds to the platform
Right.
would have had to eat the law. But executed a bunch of over-the-counter deals with a whole bunch of crypto influencers, including
Yeah, this is wild.
founder Justin Sun, investor DC God, and a whole bunch of other it's from Yearn and Cream Finance to basically ensure that the curve probably not drop or hit that loan recall. So
Mm.
like, if you think about it, it's just like the government bailing out the banks, except it's influencers in this case.
Yeah.
So
Yeah. So like that, okay, DeFi is a response to this banking crisis in 2008, right? Um, Bailouts. And now we have basically the same thing going on in DeFi. Is that a good thing? So it's a black eye for DeFi. And
yeah,
it does,
that out to be over
is
leveraged.
this system any better than the one we're trying to replace as it currently stands right now?
Yeah, like how can we let him be so over leveraged that he could potentially negatively impact so many different crypto and lending platforms? It
Yeah, a little scary. I don't like when I see things that make Gary Gensler look good. You know, not what not what I like to see, unfortunately.
yeah.
But speaking of sanctions, in mining too. So I have an article from CoinDesk. Amid sanctions, Bitcoin mining machines are flowing into Russia as the industry thrives. So at CoinDesk Consensus 2023, Ethan Vera, the chief operating officer at global mining services firm Luxor Technologies, said that more machines are flowing into Russia than anywhere else in the world. Pretty bold statement. According to quote sources in the CoinDesk article, mining rig makers like Bitmain and Micro BT are expanding to Russia as the US market becomes saturated. They're just not able to sell them here anymore. Report from the Cryptocurrency Mining Group that increased regulatory scrutiny and taxation in the US and elsewhere have made Russia even more competitive, making it the only country able to substantially accelerate hash rate growth. And then I report a little bit, and it's like, why? Energy, and
Laws that have allowed that basically made mining legal. There's talk about some state sponsored mining within Russia that are starting to pop up, especially in more remote areas. So there's a lot of potential reasons, and it basically is seeing Russia's seeing the opportunity and is seizing it with these winners. I think the US is doing a lot of things just to scare miners off or to push them elsewhere.
hopefully they reconsider that. But yeah, it looks like there's a happy home for them, and it's a competitor, on the
Absolutely. With that said, talking about competitors, BlackRock and MSC have drawn scrutiny from a US House committee based on funding that facilitated investments into blacklisted Chinese companies.
mhm.
So, a select committee, and they started probing basically efforts by US companies to invest or uh, base China. And it doesn't write legislation, but it can make policy recommendations. It has the powers to subpoena executives and other officials. So this is super interesting. BlackRock is denying any wrongdoing, as with all applicable U.S. government laws, but
Mm.
on BlackRock right now, just to
We
even have this accusation being thrown out there that they're
Yeah,
taking
because it
over.
kinda comes while they're doing ETF application, and it seems like nothing is ever said bad about BlackRock. But there is also, this is according to this article, it's another example of far-reaching effects of the tension between the US and China on US companies. So it could just be that, as the 2 largest economies clash, over, dollars, per kinds of things, Taiwan, Russia's invasions of Ukraine. There's a lot of things going on between these 2 countries as they kind of battle it out for world domination. So it could just be that. But you never really hear negative news about BlackRock, and it happens right after their ETF application.
Exactly. I mean, that's the that's kind of the rumor mill that's going. Is this
Mm.
maybe a stalling tactic, just to give the SEC some more time to deliberate on the Bitcoin ETFs that are coming ahead of time? Basically saying, look, BlackRock's getting like checked out by this committee. We feel like we need our decision, and could be kind of used if they say we want to have equal competition for all ETFs and let them be all launched at the same time to delay all ETFs. Grayscale has actually called for the SEC to approve all ETFs at once to allow for fair competition. And so this thing move,
Kathy Wood said a similar thing, just that she thinks they'll probably, if they approve more than one.
I think we're kind of in a situation where this could be used as a delaying tactic as we're starting to see some of the deadlines approaching. Um, since there's a 240-day process, which is broken up into 4 different periods, 245-day periods, a 90-day period, and then a 60-day period. And they've got to either choose to allow the product to launch, reject it, or ask for more time. And August 13th, which is next week, is the end of the second 5-day period for ARK Invest, and August 31st is the first 45-day period for BlackRock. So I feel like this could definitely be used to help extend their time horizon. Say, hey, we need some more time.
Yeah. So the process is moving on, but there should be at least some kind of news August 13th. I think it's um, ARC. I think they're, but basically they're through the first 90 days and they'll have to either, I mean, I think people are expecting a punt, but they could decide approve or deny. Um, and then yeah, the first 45 days will pass for BlackRock at the end of the month. So, well, it gets a little bit of news as far as it moving along. But I think BlackRock, the final, after all the periods, 45, a 90-day period, 60, it's like in March. So we're talking pretty close to the half. How exciting would that be? You get Bitcoin spot ETF approvals, multiple. You get the Fed forcing, and starting to drop interest, something like that. Oh, could
Oh,
be good.
it could
Could
be
be, yeah. Don't get don't get too excited. At least that's possible. It could have Bitcoin president surging in the polls. Who knows?
absolutely. I
Yeah, I'd be. Yeah, it's gonna be an interesting year next year. All right, can't wait.
and on the ETF news, we're seeing ETH is starting to draw some ETF craze, with Ethereum futures ETF applications being filed by at least 6 firms uh,
Hmm.
over the days.
Yeah, just all a bunch of. We got what ETH strategy ETF, Bitwise, Roundhill, ProShares, Grayscale,
Direct
uh,
Sun.
bunch all of a sudden. Now there's the Bitcoin futures ETFs, and they're working for. The big news is a spot Bitcoin ETF, and it seems weird that they wouldn't allow a spot, but they have the futures. But this story is about Ethereum futures, kind of that first step for Ethereum ETFs.
Yeah, exactly. So it's interesting. We've also already have the first leverage futures Bitcoin ETF. So
Yeah, like two
we're
times leverage. So yeah, there's some speculation that that's why
people are
maybe.
starting to explore ETH.
Yeah,
It's kind of like the next frontier. We wait for approvals on the spot.
I mean, somebody's got to apply. So
Exactly.
news before we close it up for today. Till kind of mid late September. Until September 20th. However, there is a whole meeting at the end of this August. That was kind of a big deal last year because it's just starting to switch rates, like,
There was the start of their pivot and
yeah,
the heavy in
this
interest
probably
rates.
won't be as big of a story this year, but still, all the same, there is kind of like a big date in between where we're going to see Jerome Powell kind of come out, give a few talking points, see if anything's changed.
Yeah, exactly. I'm very interested to see what happens. So maybe
But kind of watching the economy, are we in a recession? Are these interest rates going to send us into a recession? But we have the major banks changing their tune about. We have Bank of America and JP Morgan saying they no longer expect recession. Um, They're modest, subpar growth, and they also warn, this is a JP Morgan story, but they warn that, um, it's this story may change.
Totally in line with JP Morgan's argument, but I can understand what they're saying about maybe not entering a recession because of how we're seeing the job market and relative employment numbers. And so I think that's going to be pretty interesting over the next how CPI, employment numbers, and everything change.
There's also Thursday. It looks like, I thought GDP was coming out today, but it looks like it comes out Friday.
And
So
PPI
we
is
got,
also coming out Friday. So we've got Thursday, Friday will be some big dates in terms of what the numbers are going to look like as
oh, gee,
we for what the Fed's going to do at this next meeting. Uh, right now, there's general unanimity that towards the hold higher for longer argument. And most about 85% of forecasters are expecting rates to hold, with the other 15% expecting rates to increase by a quarter basis point at the next meeting. It shifts a little bit for the November meeting with 25, almost 20% of forecasters expecting the rate to rise by the November meeting. But then kind of impressions kind of stabilize that number and holding rates to next year, with some interest from forecasters expecting rate cuts somewhere between March and May. Uh, but see, I I'm I am seeing get behind the higher for longer uh, for a while.
yeah, it seems like the market is priced all this in at this point and is expecting that maybe another increase or two, but not much. We gotta see right now. They're definitely not going to do anything for a couple months, so we got a little time, or a month, I guess. We gotta wait now.
Yeah, that's it.
What we're gonna do, just kind of watch the numbers and see what's going on. A little bit of data coming out this week. Yeah, the GDP is for the UK on Friday, and then CPI. Yeah, so it'll be interesting. But yeah, just kind of wait and see.
Absolutely.
We post to YouTube first. So yeah, subscribe, catch the videos as soon as they drop. Our goal is to provide unfiltered content that help foster genuine discussions and help the entire space grow. Please remember, this is not financial advice and we are not financial advisors. This show is presented for educational and entertainment purposes only. Please do your own research before making any investment decision. Thanks for your support and stay tuned for the next episode.